bring on board Sachin Shah, MK Investment Managers, joining us this afternoon to give us his perspective of markets. Sachin, let me start off with, anything interesting that you're finding in the market at this point of time? Just give us a sense, sector, stock, even in earnings, something that really stood out for you.
Sure. Thank you. Thank you very much for having me on a show.
Great having
So
you.
yes, of course, we are in the midst of a fairly heavy earning season, and what we've seen is that most of the earnings have been actually very good, much better than what it was feared. Particularly, when we saw some oil prices shooting up beyond $100 in the month of March, April. So everybody was fearing that now the inventory losses or in terms of RM material, price inflation and all of that will have serious impact on margins or even on the demand destruction. In most of the sectors, whether it's if you look at the automobile results, if you look at some of the other consumer companies, even if you look at some of the financial results, whether it's banks or financial services, across the board, we have not seen any demand destruction. We have not seen any major margin compression. So I think the profit growth have been very, very strong. And that clearly gives us a cue in terms of where are we headed over the next 2, 3, 4 quarters or over even the next 6 to 8 quarters. I think that gives us a lot of confidence, a lot of optimism that the earnings trajectory is back, which was not there probably for the last 12, 15 months or maybe 18 months. But I think the next 12 to 18 months, we believe that the earnings growth is going to be very, very strong. Which effectively makes us very, very positive with the current valuations, which are very reasonable at probably 15-year average, even if you just look at the Nifty, maybe just about 22 times. So that's how we are thinking at this point in time, that very, very positive view on the overall equities as a space. I mean, particularly Indian equities.
What's keeping you positive with regard to the growth, Sachin? So one is, of course, that we've done well in a difficult quarter. And if things were to improve, that could well sustain. But on the top line, what's giving you the confidence that this is sustainable?
Yeah, so if you see, say, for example, if you look at the automobile volume numbers, month after month, they have been very good. And this is again in a weak season, which is April, May, June, July, generally are not supposed to be some very great months for automobile, because typically their season or the festival season is when you see some great numbers. But the GST cut, which is August of 2025, those volume growth seems to be very, very strong and sustaining. Even if you look at the demand on the rural side for many other consumer products, most of the managements are commenting that rural has actually bounced back very strong. There is clear amount of green shoots all around. So again, those kind of, and even if you say, for example, Bajaj Finance came out with a result, and if you look at the kind of the growth that they have shown, so again, they typically finance a lot of consumer products, so demand over there is also very strong, and asset quality for most of this retail loan books, whether it's private sector bank, public sector bank, or even the NBFCs, has been very strong. So we believe that the consumer is clearly back. The consumption is really doing very well. We will also see a very decent pickup on the capex side, particularly in the private sector, because now that so many companies are running at probably 85-90% capacity utilization, and now that is limited scope for brownfield expansion, we believe that in the next 12 to 18 months we'll also see a lot of greenfield capex coming up. So that gives us a lot of confidence in terms of economy moving into a very virtuous cycle. And the best part is, I think the oil price is remaining in the sub $80-85. I think from that perspective also the worst seems to be behind.
Just hold on. We'll come back again.
This is about the 3750 mark. This could potentially be a breakout candidate in the near term of a flag pattern up move. Would look at a target of 4,000. Stop us to be kept at 3630.
Sachin, what's your take on some of the auto company numbers that have come in? Especially Mahindra. We've seen good traction coming in from rural. Hyundai also gave the same commentary about the rural growth being much better, monsoon picking up, good reservoir levels, and the Rabi crop seems to be coming in well as well. How do you look at some of the auto companies?
Yeah, so clearly, automobile companies are doing exceedingly well. As I mentioned earlier, that post the GST cuts in August 2025, the traction, the momentum is really has come back very strongly, and most important, it's also very sustaining. And also, even if you look at the data points, the rural demand has been even more stronger. So, like for example, if you look at Maruti, I think the whole revival in the small car segment has been phenomenal. Even if you look on the premiumization side, like if you look at the Eicher Motors, their volumes have also been doing very well in the last 6 to 9 months. Similarly, Mahindra and Mahindra, like you mentioned, again, they came out with the results last 1 or 2 days, and again, they have been excellent, right? So I think across the board, most of the automobile companies are not only benefiting because to do with the higher volumes, but I think also very interesting part is that in spite of raw material price inflation, they have I think they have maintained their profitability, or they've maintained their overall profit growth uh, quite good. So I think it's a very strong outlook going ahead from here, particularly because the rural demand has actually come back very strongly.
What about financials, Sachin? What's the play there, and how would you place your bets?
Yeah, so in financials, I think from a risk-adjusted return perspective, or even from a risk-reward perspective, I mean, when you look at the current valuations, I think we really like the private sector banking space, and within that, the leaders. I think they are available at some very reasonable valuations. They are available in their low teens kind of P multiples, or maybe just about 2 times the book, or 2.5 times the book. Most of these large private sector banks have a very decent ROAs and ROEs. Their risk asset, I mean, their asset qualities are also very strong. So I think, and of course also the growth outlook out there is going to be at least in, I would say a decent double digit kind of a growth, at least in tens kind of thing over the next 2 3 years. So we believe that the risk adjusted returns overall, valuation parameters, risk reward from all perspectives, we like them a lot. Also, NBFCs have delivered very good results, quite a few of them. So again, that's also a very that's also a place where we would like to allocate some money.
What about ITs, Sachin? Because that's become, dare I say, as volatile as ever.
Yeah, that's true. So you clearly have two camps now on the IT side. There's a camp which believes that there's a significant amount of disruption to that business, and before they actually come back, there is going to be significant amount of downside to their not only their growth but to their absolute profit levels over the next 2 3 years. The other camp is of the opinion that clearly, whether it's AI or whether it's any of these new age technologies, you will need these large IT companies or IT services companies for implementation of them, and that's why they are not going away anywhere. Yes, there may be some bit of slowdown in terms of their growth, but overall, over the next 3 to 5 years, they should do quite well. So I think that's where the tug of war continues in the market. I think the jury is still out. I personally believe again there that the valuations have become very reasonable. So again there, from a risk reward perspective, yes, there is a case to have some allocation to that sector.
And Sachin, how do you look at EMS as a pack, and Dixon in particular, if you have a view?
No, I think EMS as a pack clearly has significant amount of tailwinds out there. Uh, I think today the kind of the outsourcing, I mean, overall electronic manufacturing services is very large, but most important thing is that we have not even yet scratched the surface for the export side. I think that's the next big wave out there, and if that starts actually, catching up the momentum on the business side, I think we have a long way to go there. And some of these businesses have actually demonstrated that they have the manufacturing capabilities, they have the domain expertise, and also the scale for the global delivery. So I think I mean, particularly if you look at the Apple phones that they are manufactured in India, clearly I think we can do that in many other products. And some of these companies which are listed, I think they are already trying to play that segment, so that entire landscape, the whole will increase exponentially out there.
Margin compression coming in at Dixon. and the management has been guiding that they would be looking at a higher margin going all the way up to 4.5-5%. This compression comes as a surprise. Uh, what is your view on Dixon from a longer term point of view, because they are getting into various joint ventures that that enhances their capabilities as well?
So frankly, I don't have a very, I don't very closely track this company, but broadly speaking, I think these businesses, as I said, they have a tremendous amount of tailwind. And these quarterly margins, sometimes can be for multiple reasons, just because they're investing in the particular line or a business, it can have certain impact. So I think the way to think about it would be that if these businesses are going to scale 2x, 3x, 4x in the next 3 to 5 years, margins are definitely going to follow. And even if when they're doing a JV, it actually assures them of a significant amount of a captive business from some of these customers, or sometimes technology and all of that, which also helps them get large customers. So I think the most important thing to focus over here is, because at the end of the day, these are all contract manufacturing businesses. So there's a assured kind of a ROE or a ROC from the customer. So margins and all that will follow as long as you get the right scale.
Exact 4% miss on the margin, on the EBITDA, absolute EBITDA number. So 462 crore is where the absolute EBITDA number has come in at. And EBITDA was expected to come in around the 480 crore mark, essentially. And that's why you're seeing the kind of knock that you're seeing on the stock. But of course, it's according to Sachin, it's a one-quarter thing. And maybe you want to, play this out from a slightly more longer-term perspective. And I think what he's saying or alluding to is that if you play it that way, you could still the stock could still do well, and the business is solid.
The other income part is 528 crores,
Yes.
and that's what is pushing up the profits, which came in net profit for the period. Reported profits is around 717 crores versus 280 odd crores. That looks a little elevated, only on the back of the other income that has come in, which is 528 odd crores in the
That's
market.
correct. That's correct. And 481 crore is where the analyst estimates for EBITDA were, came in at 462 crore. So that's where the differential lies, and which is likely why you're seeing the kind of knock on the stock that you are. So that's broadly with regard to Dixon Tech. But we're rounding up very quickly. Sachin, any last thoughts? What is it that that looks interesting that you're recommending to your clients at this point of time in terms of stock sector?
No, like I said earlier, we are clearly very positive from the valuations perspective and also the growth outlook. We believe the private sector banking today is available at very, very reasonable valuations. So from a risk adjusted or a risk reward, that's definitely one sweet spot.
Okay. All right. Let's start, capping in to close. And in terms of sectors for the week, and Sachin, we'll let you go. Thank you. Thank you for coming in and giving us that perspective.